TGIF, everybody. Hi, Brock. How are you, buddy? Hugo, bonjour. Como allez-vous? Sinatra, how are you, Marco? What's going on? I think Jeff Bezos should have taken a few shares of Amazon up to space with him. They could use the weightlessness today. Are you, Brock? Why? And let's take a look around. Specifically, because of, okay, yeah, all right. So, hello, Ryan. I want to talk to you, Ryan, in a minute, but I just want to show something. I know Amazon's not open yet, but we had a lot of important earnings this week, and some of the leaders, FANG stocks, MAGA stocks. Apple didn't really like its earnings, came off, should come in lower. Amazon showing that it's going to be down about 6%, I believe. So they didn't like it missed on the revenue side. Microsoft had great earnings, but they kind of sold it off. Google had the best earnings, but that's coming off. Facebook, they didn't like the earnings. Facebook got hit. Looks like it left an island top. That's interesting. Okay, and Netflix hasn't been doing that well. So, some of the biggest names, hello, Alexander, some of the biggest names in the NASDAQ 100 are not having such great weeks. And either is NASDAQ now. So just take a look at it. So we had this big day, and this candle, I thought, changed the character of the market. And then, of course, the market makes you doubt it. But look where we failed from yesterday. A little bit under the 88.6 level, never closed above the 78.6 level. I'm just talking about from here to here. And I think that we're going to attack these lows here. The S&Ps are giving up the ghost a little bit too. Probably need closes back under 43.60, of course, under last week's lows. And the dollar, I think that the pound, I'll probably be looking at the pound as a short sometime next week, because I really don't think we're going to get closes over 140.20. Okay, so I'm going to be looking to short the pound next week, perhaps the euro, up around 19 and a half or so. And let's see if we're at this 91.40 was, where I thought I'd start probing alongside the dollar again. Okay. Yen's up a little bit, but, I don't know if this is it, even though rates are a little bit lower. I still thought that we had lower to go in the yen, that perhaps we would, trade down towards this three drive 108.40, maybe 107.65. We'll see on flat. And maybe next week could be taking a look at USD CAD around 123. So I'm already preparing myself. I'm not in the camp right now that this is it for the dollar. And and I know a lot of smart guys that are looking for 85 here. I'm thinking that there's one more wave from here. And if it's equal to 89.60, 92.90, it would take us up to about 95 and a half, 96. Okay, so next week, my intentions are looking for alongside the dollar. And perhaps that's what brings this gold to a conclusion, although I think we'll still head a bit higher. I know some people are talking 1965. if I'm right about the dollar digging in its heels and rallying again, there's going to be a place to short gold. Silver's weaker still, even though it had a nice rally. And I don't think we should close back over, say, 25.90 or so. And I still think there's another shoe to drop. I'm not sure where this speed line would come in. So Ryan, TGIF.
Yeah, hi Dale.
How are you?
Yeah, not too bad. How's my sound today? No feedback. I've got my earphones on, microphone
Yeah,
on.
my God, you sound like a disc jockey.
You still sound like Jason Statham, so it sounds good, mate.
I'll start spinning some tunes in.
Jay, yeah, that's right. Yeah.
Don't get me swearing on a Friday.
All right. All right. Yeah.
All right, Turkish. All right. All right.
Turkish lira.
That was from a movie from Snatch.
Oh,
if you've seen it.
Okay. All right. All right. So, a pretty bad week for the dollar and the Fed, and good week for the metals.
Yeah, it's been a bit beat up, a bit of a mixed picture. We've got some moves, but again, nothing's really gone anywhere of note. Cable we're seeing today, it's had a strong 9-10 days now after it hit the lows around those 35.70s, but it's just now sort of feels like it's running out of steam into the end of the week. We can't get close to that 140 handle. You would have thought with the strength behind it this week, we might have seen a crack of it, a good test of it. But the high is 83 today and still not looking like it wants to go that far. So we've got a lot to look at into the fix.
Yeah, where are you guys at on the dollar? You two still. This pullback, this decline we're having here, is this it? And you think we're going to new lows from here? Or is this going to be a break to buy for one more wave to the upside? You guys have a opinion on it?
Personally, I think the dollar is going a lot lower eventually. I have a fear that Jackson Hole and what comes after it might give us another last push higher, but I'm not convinced.
Okay. Brian?
Yeah, I think it's got a chance to go lower, and pretty much the same. I mean, 5 minutes after we got over Powell, everyone's looking at Jackson Hole, and if Jackson Hole doesn't do anything, everyone will be looking at September. But it's one of those things where the market is expecting so much, and when it finally gets what it wants, i.e., when the Fed are going to taper, you're going to have a little wobble, and then it'll be okay. What's next? But it all depends on how rates go. And I think what's important is, the floodgates are now open. The barn doors are open on the Fed speakers. We've got Bullard this afternoon, and I think Brainard something at like 10 to 1 in the morning, our time. And so now we're going to get the flood of Fed speakers all explaining away their decisions and what they think and what's changed, what hasn't changed. And what I want to get is over this end of month day. Because you just sit here and you just don't know what's end of month, what's normal, what's fundamentals. And sometimes I just hate this time of year because it just becomes a mess. You're second guessing yourself. But as we know, we just look at the levels and look at what's trading. Aussie dollar can't get above that 74 handle. That's a sign in itself. As I say, cable still not even trying that 140 handle.
Right.
Euro dollar's made a little nudge above 1900. But that's fading as we speak. Nothing's really conclusive, is what I'm saying at the moment.
Stelios could call yesterday that the S&P would make a new high. I guess it did it on the GDP print, and coming off because of what happened in Amazon. So,
it's a sorry to interrupt. It's a pattern, right? As soon as the market opened, the next 5-minute candle was just straight up. It's we should build a robot or something that or an algo that just does that. I'm sure a lot of people have done that, and it's been profitable. But it's just crazy the way the market just keeps grinding.
Yeah, look at VIX though. It's going to come in at 19. We were at new highs in the S&Ps yesterday, and we're so far off the lows from just a week or so ago. So I don't know. I still think that, going all the way back to when we had all these ghost pips back here, this stuff, when I thought we were accumulating, we had a few false breakouts, looked like it broke out, gave it back, looked like it broke out, gave it back. But to me, it looks like, higher lows, higher highs, and with the S&P making new all-time highs, why is it here instead of where we were just a few weeks ago?
Yeah, true.
Is
And
there a
also
market message in there?
Also, the way it's making new highs, it's not exploding higher, it's just grinding. So, longs in equities, I think this is one thing that should be worrying them.
Yeah.
The VIX is not breaking out yet, but it's not. If you had showed me the S&P chart, I would have told you, the VIX is single digits or close to single digits.
Right.
So you
there,
have a
yeah.
good point.
So
Yeah.
right. Yeah. So I just wanted to point that out to everyone. Blake, good morning. How are you? TGIF. I think in another month or so you'll get to sleep in another hour. September?
No, November, buddy.
No.
Beginning of November. Yep. Yeah.
Oh God, I didn't think they waited that long for.
Yeah. I think it's beginning of November.
Oh.
Why do you ask me? We don't change our clocks here, so I have no idea.
Oh, that's right. That's right.
Sorry, Coach.
The
getting up early again.
Huh?
Sorry, Coach. Yeah, you're getting up early again for another month.
Well, I do. Yeah,
he never changes.
I don't get a
unfortunately.
break.
Yeah. So hey guys, good morning and
morning.
Happy Friday to you. So this is the end of month, and I think like the big things that we need to pay attention to today is that we have end of month, probably some position liquidation. You might see a little bit of movement there for the end of month, and then also we got to take a look at the the stock markets, kind of holding in there, regardless that Amazon really missed earnings overnight. And I have to say, it's expected, right? I mean, I know Amazon's, the big, big swing in whatever you want to call it in the markets. It's the company that everybody pays attention to. But if you didn't think that as we opened up the economies that Amazon, their business was going to slow, then I don't know what you're thinking, because obviously the market's thinking, all right, brick and mortar is going to be more of a beneficiary here in the current environment moving forward. So, companies like Amazon, online retailers, UPS, those types of companies are going to be pressured moving forward, and so the market obviously knows this. So I think that you're seeing a little bit of selling in equities right now, but I think it's going to be fairly limited. That doesn't mean that stocks aren't priced for perfection right now, but I think that that you'll see stocks come off and it won't come off too aggressively. So you can see this, the S&P actually held. Once again, the key support that we've been looking at is at 43.80 this week, 43.75, and we came down there to 43.79 and then bounced, and we're holding it. Now, I'm not sure if this support's going to hold for today, but I in my right mind can't get bearish equities until we start seeing the S&P well below 4,300, which means that we would be below this wedge support. So don't get too carried away with, oh my God, Amazon missed their earnings and, it's Amazon, so the market's going to be down like 10% today. And, don't get too carried away with that. I'm not thinking the market's bearish, not as of yet. I mean, we've seen guidance lower in Amazon. We've seen guidance lower in Facebook. What are some of the other big tech names that we've seen? Apple, guidance lower. But again, these are all companies that are going to be, typically beneficiaries of us being in COVID lockdown. And speaking of COVID, then you talk about the Delta variant. There's a lot of, a lot of news right now that's reporting that the Delta variant is more
contagious. Virulent?
Contagious, thank you. It's more contagious than a lot of really nasty, diseases. I forget what they were.
Smallpox and the cold.
something like that. Yeah. And it's like, oh, wow. That's pretty crazy. But until you
I
start,
wrote something about vaccination romance yesterday on Twitter. You want to hear it?
yeah.
Okay.
What'd you write?
I had hoped my kiss would melt you, but I didn't know that we could still get Delta.
That's
Oh my
good.
gosh.
That's vaccinated romance.
Wow,
What do you think?
Don't give up your day job.
Worse. Huh? Yes.
That's
I agree with Ryan.
What do you say?
Keep your day job, and then also.
Oh, Ryan, I don't know. I'm the poet laureate here at ForexAnalytix.
I'm gonna say, Dale, thank God you never had kids, because your dad jokes would be beyond.
They'd run away from home.
Oh, they'd be.
Oh my God,
absolutely
good.
My kids just tell me I have the worst dad jokes, but you take the cake, and you don't even have kids, which is awesome.
Yeah, it really is.
Anyway,
I don't even have a dog right now.
Right. Oh, yeah. That's here. I've got 3. You can take some of mine. Let's. Okay. I want to. Speaking of COVID lockdowns, real quick. Let's just take a look at the Aussie. The Aussie's had a really big rejection, and this week at the 74 cent level, we went just above that the other night to 74.15. We're bear flagging. We still haven't reached the ultimate target coming out of this triangle, which would actually take us to 72.30. But I mean, I would say ultimately, if the Aussie dollar can get back down to 70 cents over here, this would probably be the best place to be on the long side. Yeah. But you look at the long term from that, what I think is a generational spike low in the Aussie. What I mean by that is this whole generation of traders, we may never see that low again in the Aussie dollar at 54, 55 cents. But I still think that it's possible that we make it to a 38% retracement of this entire move, which would take us down to like 70 cents, just above 70 cents. I think that's a place where you can get long. Hopefully we can make our way down there at some point. We could obviously go further than that. I'm just saying that this is where I'm really going to be looking for longs, is down here. This is a big breakout, but we're still perched above, we're still perched above those levels. But more importantly is the Aussie continues to trade really heavy, and that's with stocks at all-time highs. And I have to say that if stocks actually ever see some selling, we could see some accelerated selling in like the likes of the Aussie, the Kiwi, Canadian currency, Norway, emerging market currencies, the lira, the rand, the peso. I mean, you could really start to see some of these currencies come under some serious pressure. But watch the Aussie. While the Aussie holds below the 74 cent level, and like I said, speaking of lockdowns, our partners at that we do some business with at Pepperstone Securities, they're in Australia. We've been trying to do this show with them. I've been trying to do this show with them for like the last, I don't know, several months, and they've been on and off lockdowns. Like they can't leave and go into the studios and the offices for like months. It's been start, stop. There's, that's a pretty big headwind for like the Aussie. So just keep this one in mind. I mean, we're still bear flagging here, So we're seeing some activity, in the markets. Just remember it's end of month. We do have PCE data coming out today, and that could be a market mover here in the next 10 minutes. Some of the inflation data that the Fed's going to be looking at. Ryan, Stelios, what do you guys think about like the data that's coming out, and being that it's the end of month, what's on your minds here?
We also have Canadian GDP. Let's not forget that.
Yeah, who cares about Canada though? I don't, irrelevant. That
Canadians,
maybe? Just kidding. I'm joking. I love the Canadians. I do. We have.
Core PCE, remember, is the one that the Fed looks at, and year on year. Yeah. What?
Wait, no, can I say something else about the Canadian since you
go.
mentioned it? One thing about the dollar Canadian, it has been trading really heavy. And ever since we broke this channel, I mean, it's been, you know, you can see we came under pressure this last week. Then we finally, or, you know, earlier in the week, and then we finally broke down and we broke through that channel support, and it's been trading really heavy since then. Some divergent relative strength, but maybe that's just ahead of the GDP numbers. People don't want to be too aggressive. But as far as the dollar goes, the dollar Canadian has been trading heavy. So sorry about that, Stel. Just needed to mention
No
that.
worries. I was just going to say core PCE is what the Fed looks at. We're expecting 3.7% year on year, up from 3.4. And the trend has been pretty much everywhere for inflation to overshoot expectations. We got Eurozone CPI today. Expected 2%, came in at 2.2. So they're above their target for the first time in I don't know how long. So I think that chances are core PCE is also going to overshoot and remain in this high transitory level. Or I don't know if it is transitory, but you know, this is what we're seeing all around the world. And you know, with oil up here, with shipping costs rising, I don't see how inflation can actually drop in the near term. You know, obviously, if you ask me a year or two from now, I think it's probably going to be lower. It's not going to be at 5% or wherever. But I think now we're going to probably be beating expectations. So that's what I think for today.
Yeah, I think there's two risks over the data, the PCE data. One is we already had the Q2 PCE yesterday in the GDP report, and that was very, very strong. And when we get the PCE after the GDP, because obviously Q2 includes June as well, you've got to wonder, have they estimated higher, or is the number already factored in? So it could be a case that we get a PCE and it's high, but it's already been factored into the GDP numbers. So we already really know that it's high. I mean, they were 6% or whatever it was yesterday, 5.4% is huge. It's massive. And then second to that, the reaction to it. If it is strong and the algos take the dollar higher, take bond yields higher, well, what's happened every time we've seen good data like that? Bond yields have gone up, the dollar's gone up, and then 5 minutes later it's reversed right around. So if you get a decent dollar move on a short number, then it's potentially going to be something you're going to have to fade possibly because it's going to kick it out of the theme of the week indeed. So you get a move in up to sort of 110, something like that. It's maybe worth having a look at.
So sorry, Ryan, you were breaking up just a little bit. Was it just me, Stelios, or was it Ryan?
It is Ryan breaking up, and he was breaking up.
You were breaking up a little bit.
Oh, sorry.
Basically, I want to just take some of the gist of what you said is, if we see any strong dollar move, you might want to fade, especially, as we go into month end, and there might be some dollar selling coming in for month end, and some of these estimates that, I try not to, I look at month end flows, especially when you get reports of these month end flows. They're not as accurate as they used to be because so much of the flows get done throughout the week. I think we've seen pretty consistent dollar selling during the London fixes this week. So, I don't know how much of it has been done, but the thing is you just have to be a little bit more careful, especially today is a Friday. It is the last day of the month. And it ends right now. So let's just I take that into account. Following the data, we're just a couple of hours away from the fix. Hey, so how do you feel? And I want to ask you, Ryan. I want to ask this for you really quick. Sterling's had a really good week. We've pressed above resistance. When we broke, I actually tried shorting the sterling at 139 at. I think 139.08 is where I was short. I got stopped out yesterday. when it broke above here. You know, as you know, for me, it was a decent risk reward. It was like I was either going to fail here or not. So it broke out, and we're approaching what I think is pretty key resistance because it's a confluence, 127% extension of the last leg lower. We knew we had a false breakdown, so this is, you know, the risk of a move up was obviously always high. But you got the 127% extension, the 618 retracement, previous support should act as current resistance. So I would say there's like triple confluence up here.
Yeah.
So what do you make of the sterling move? Do you fade it, or you know, do you have a strong feeling at this point?
Well, at the moment, everyone who's been talking in the room wants to short up at 140. So there's going to be a big queue of people up there. And if we're a reflection of the retail market in general and others, then, you know, that's perhaps why we're seeing it not even getting that close to 140. You know, I'd expected yesterday a test, you know, 139.90s, something like that.
Yeah.
But you know, you've got to watch the clock, as you say. It's the end of the week, it's end of month. You know, do you want to be selling something 5 minutes before the end of the week? You come in on a Sunday night, low liquidity, and someone thinks, well, I'm going to knock the stops out here, and it trades up to 140.30, cleans everyone out. You wake up on Monday morning and it's 139.70 again.
Yeah.
So it's one of those, you know, you're either going to trade it or you're not going to trade it. And given the size of the level, there's probably going to be more people trading in than not, and I'll probably be one of them, even with the risk of that flip around on a Sunday night. But yeah, if it does break up there, then we're potentially off to the races, and we're looking back towards the big highs, 142s, 143s that we saw last year or so.
Well, if you guys follow me via Twitter, or if you've never seen it, go look at my pinned tweet, and you can see exactly how I feel about trading the sterling. It's definitely a love or hate relationship I've had over the years. Yeah, I think I filmed that video like 5 years ago, but it's still very, very relevant to today. You know, also I just want to go back and reference really quick. You know, here's the S&P. Remember we did, and one of the other things I want to point out, just you know, kind of got overlooked yesterday. But we had a slight false breakout yesterday. Oops, let me go. I was trying to get over to the hourly chart. You know, we actually brushed into new all-time highs intraday in the S&P. We obviously fell. The remainder of this move lower was, you know, following Amazon's earnings. You know, the stock market is vulnerable intraday. But I just want to point out, if we do break lower, think about this as a range extension, right? So if here's your S&P, like, let's imagine this. Okay, this is a range extension lower, and you're like, oh wow, you know, the point I was trying to make a little bit earlier. Don't get so excited that, oh, you know, this is it. You know, we're going to hell in a handbasket. Remember, we're still in a wedge here. I mean, so, you know, even a sell off down to, you know, this 43.20, it's still above wedge support. So, you know, we could get some intraday selling end of month, you know, bad stream of news with some of these internet stocks, or, you know, stay at home stocks, but still overall we're in a very bullish trend. All right, so we have data coming up in just 1 minute. Dale, you do not have an interview today, right? Because it's Friday.
Correct.
Okay, so let me mention this, guys. If you are on the fence, or have been on the fence about joining the ForexAnalytix community, right now is the time to do it, because we've joined forces with the Forex Flow Live folks. Ryan and his team and a bunch of traders have come over. You can see here's our chat room. There's our chat rooms. We have the Forex Flow Live room. We have news and research, trades room, where, you know, we're putting in our trades. These are, you know, all from just over the last few minutes. You know, and our general chat room that is pretty much the same as it always been. So we've added several new rooms to this in our community, because we've had to make room for more people. Ryan's got a great stream of information that he pumps through ForexAnalytix, you know, with orders and options that are coming through. You know, you've been a great addition, and so is the rest of the people from your community. And for those of you that want to be involved, remember, we have special pricing, buy 1 month, get 1 month free. and we have discounts for the semi-annual and annual subscriptions, especially for those of you guys and gals that have been around for a while, and you're like, oh, I want to take advantage of getting a decent or a better price.
Okay, data coming out. Okay, let me go to the dollar index. How much time do I have? Well, it should be out already.
Oh, shoot.
Oh, there it is. Actually, a little bit worse than expected.
Under pressure. Tell me what the data is.
The core PCE 3.5%, 3.7% was expected. I thought that would have beat. Personal spending was better though. Canadian GDP, I don't see it yet. So I was wrong. I thought the core PC would be higher than expected. It's still up from last reading, but not as much as expected. Okay.
Incomes came in a little bit better than expected too. So that's good. Where's the Canadian numbers?
Down 0.3 on the GDP. Producer price is flat on the month. Raw materials up 3.9% on the month.
So down to 0.3 is as expected, exactly. All right.
Yeah, and as per last time.
So we're not getting any reaction really from the dollar CAD either. I mean, this is like about as non-reaction of a market that we could get across the board. I mean, look at the euro. The euro hasn't done anything.
I mean the PCE data is maybe setting itself a little too high, but it's coming round about expectations. We're not within sort of 1 or 2 pips. It's okay. It's when it's expected at 3% and it comes in 5%, we get the jumps. So a pip up on last month and but a miss of 2 on expectations. So yeah, looks like it's pub time.
Hey, well, I guess remember the day's not over. I have to say, we still have to wait for the market to open. We have to see how the market digests the news with Amazon. I mean, because let's not forget, Amazon is Amazon the largest publicly traded company in the U.S. now? I don't keep track of all that crap.
It was the largest one in the world, right? Not just the U.S.
Yeah, I mean, it was or is, or I know it's like neck and neck with Apple and whoever else, but I know it's obviously a very big company, and it's something that we should pay attention to. We shouldn't dismiss it. But like I said, the market already has assumed that the data is going to start, being a little bit worse for Amazon moving forward as the global economy, the U.S. economy reopens. So I mean, that's not we still have to see how the market digests it. So I think that's key today. So at the open, and then watch the FIX. The London FIX and Ryan, because those fixing flows could move the market at EOM, and so what time is that for you guys in the UK? 4?
Yeah, the actual FIX is the official time is sort of like 3 minutes before 4 o'clock London time.
Yeah.
But as you mentioned before, the moves, we can see them starting anywhere from about half hour before. You start to see prices creeping. You'll see a few pairs maybe popping here or there.
And still, I hear they're looking for people to work on the London FIX. They're looking for the job description is fall guy to work on the London FIX.
Wet finger in the air, yeah.
Hey, by the way, speaking of which, and Dale, I think you're going to really enjoy this. I want to. This is completely. You just jogged my memory about something that I did yesterday.
About his book?
No. I interviewed one of Ryan's contacts. His name is Dick Matthews, Richard Matthews here. And I interviewed him yesterday, and we're doing a series with him on Trader Summit, and we're calling it Tales from the Desk. And him and I were discussing about like his early years at JT Marlin. Some of you guys might have got that. I'm joking. Over at Phillips and Drew back in the 70s, and we were talking about some of his old stories, and which I find very interesting and fascinating. And he's gonna give us a few of his crazy stories, and I'm recording, and it's just like fun to listen to because he thinks and I have to agree, it's a time that it's a time that I think that the markets were better and more efficient and classier. I mean, Stelios, you remember, and this and you're gonna have conversations with Dick as well, moving forward, I'm sure, because I know you guys have worked with some of the same people. But I mean, you think about, we were talking about this yesterday. He's like, as a broker in the UK in the 70s, he's like, that's where I learned how to dress. I learned etiquette. I learned, how to match my socks and my shirts and my ties and my shoes, and my belt. And I'm like, you learn a lot of that. I mean, when I was a broker in the mid 90s, I wore suspenders, for crying out loud.
Suspenders.
Wow.
I wore suspenders to the office in Arizona. The hell. I can ever, but I mean, but you remember,
I wore cuffs.
Yeah, I mean, you wore cuffs,
handcuffs.
Right? I mean, you handcuffs. That's funny. No, but you dressed nice, and you were.
Yeah, you did.
It was a different way of life, and it was fun. But
you had to look good to churn your clients.
You did. I mean, I remember. Being in my mid 20s, seeing my first client and trying to pitch him Pixar stock.
Yeah.
As they were going.
Remember, you used to get a quarter on the spread on OTC stuff.
Yeah.
I mean, back you could get paid.
So anyway, he's got some really great stories. I think you guys are going to enjoy him moving forward. Hopefully we'll have that edited over the weekend. And speaking of which, Dale, I'll be editing. I'll be spending a little bit of time with Jim Welsh today. Cool. He's going to give his macro overview of what the Fed did this week and moving forward. So anyway, he's a really nice guy.
He's fun to interview too. Good guest.
Also next week Thursday you have me as a guest, right, Dale? Is it next week Thursday? You don't? No. Okay.
No. Okay. It was for something else.
Okay. Anyway, it's okay. All right.
Okay, but we're going to talk about your book, and Stel, that reminds me, I have to get the schedule to you for August. Okay, I'll do it this weekend.
All right, guys. Well, Dale and Ryan, I think we are probably just going to have to wait for the market open, and we're going to have to wait for this end of month stuff to happen. And anything else that you wanted to tell everybody?
No, one thing that this is a little fledgling thought that's coming into my mind is just keep an eye on euro dollar maybe into next week. The reports today in GDP and inflation were pretty solid. I know Germany missed expectations, but still a decent enough number. All the others posting good inflation numbers and GDP, and just as I say, a little fledgling idea that we might start to see a bit of interest coming in on eurozone numbers if they're going to start trending higher, and then obviously that's going to fall into ECB expectations. So just
I actually did notice a lot of the guys that you've traded with in your chat rooms that have come over to the ForexAnalytix community, and I just want to state that a lot of Ryan's guys that are in there are very much macro thinkers. And it's really nice to have them in the community, talking about, some of the, more queuing into some of the more macro themes that are going around the markets. And that's something that, how you decide to express that, whether it's through the euro dollar, like for me, I'm thinking, the stronger European inflation data, I'm going to express it in a currency pair like the euro sterling, trading it off as support. But I think there's different ways you can play that than just the straight, euro, right?
Yeah, exactly. And if we, one of the things we spoke about this week is the spectre of stagflation raising its head in particularly the US. It's a risk that's coming, but if you're going to see the eurozone sort of hit a little rally, if you like, of good data, and you might see the US just moderating a bit, dipping a bit, then just on the simple divergence, you're going to see euro dollar going higher. It's one of those things that it's a longer term thing. It's not, you wouldn't jump in now and buy euro dollar, but you'd look maybe if you get a decent dip down towards that 1750, down to those lows we had down this week and last week, might be worth just getting in something to sit on.
All right. Well, thanks, Ryan. Stelios,
Ryan.
any last ideas before we go?
No, let's all get a beer tonight. It's Friday, so
that'd be great.
That's nice. Best idea of the week.
Yeah, you
know, I
wish we weren't all so far apart and we could do that.
Yeah.
Or at the beginning of one of the things at the beginning of COVID, guys.
Oh yeah, your happy hour.
We had a Zoom happy hour unfortunately the Zoom happy hour was at like 9 a.m. for Dale and I, and everybody else is getting plastered, and Dale and I are like, it's 9 a.m. here, so we'll drink
mimosas.
A mimosa, yeah. Anyway, so anyway, guys, hey, I hope you all have a wonderful weekend. Remember, take advantage of the ForexAnalytix pricing. We're going to keep it up for a little bit longer, but it doesn't stay up forever. You guys know that, and when the prices go back. Well, I don't know when the next time we're going to give you a discounted rate, because
so go ahead and do it already.
Yeah, so just take the plunge, jump on in, and lock in the prices, because we always grandfather everybody in. So when we raise our prices, we always just grandfather everybody. As long as you're staying with us, we're fine with that. So we've always had that policy for the last 5+ years. So anyway, and then also don't forget to visit Trader Summit too. Trader Summit is a great place to look at, read about some of your favorite books first thing in the morning. That you sit in front of your computer. You got a lot of great updates that come through here. So Dale, Ryan, Stelios, you guys have a great weekend.
You too, Blake.
Cheers, guys, and thank you to all the watchers and viewers and listeners and everyone in the chat rooms and everything. Hope you've all had a good week.
And for those of you guys that are in our community, I'll see you on Stelios, and I will see you on the Morning Edge in about 30 minutes.
All right, and remember, everyone, no matter what's going on, Delta, getting stopped out, just find something to be grateful for, like good friends and things you've learned this week, and don't just count your pips or lack of them, count your blessings. And we laid it all on the court for you guys again this week. It's our mission to build up and edify traders every day, and I think we've done that by bringing in a very competent guy, experienced guy like Ryan and his team. And we're always doing things to make it better for you, because we know it's not easy. And we want to support you in your effort in a very difficult endeavor. Okay. So that's a wrap, everyone. Have a great weekend. Thank you, Stel, Blake, Ryan. And I guess Steve will be back next week.
Thanks, everybody.
Thanks,
guys.
Take it easy, everyone. Adios. Bye.